Let's just switch gear to the world of business. Welcome to Let's Talk Business. Markets declined over 1% to end lower for the third consecutive session, while banks and IT stocks were under pressure. The pharma sector bucked the trend and advanced in trade. Hiral Daria with a wrap of all the market action.
A third consecutive session of decline is what we've seen in the markets, and it has been an interesting day of trade as well. Clearly, Sensex and Nifty slipped to the lowest level in a month since the 3rd of July in intraday trade. You had Nifty which fell below the 19,300 mark, whereas the Sensex which fell below 65,000 levels. In fact, you had Bank Nifty which clearly underperformed the benchmark indices in trade. From a sectoral perspective, you had banks, IT as well as the financial services that were a major drag on the markets, whereas you had the pharma as well as media stocks that were the top gainers. Overall, if you go to see from the day's lowest levels in terms of Nifty 50 as well, we hit a low of 19,296, but we recovered to levels of 19,381. So almost 100 points recovery that did come in the last hour. The advanced decline ratio was pretty much in favor of the bears, and that trend has continued so far in the last 2 to 3 trading sessions. Adani Enterprises, Adani Ports, Eicher Motors, Divi's Laboratories as well as Hindalco, these were the top gainers in terms of Nifty 50, whereas on the losing end, you had names like a Titan that reacted to numbers, ONGC, Bajaj Finserv, ICICI Bank as well as a Nestle. These were the top losers. Moving on, you had Newland Laboratories that reacted to numbers. Dabur, in fact, the stock was under pressure when we opened in trade on the back of the reports claiming presence of cancer-causing substance in the honey, but the stock recovered even though the profits missed estimates. Sun Pharma hit a 8-year high on the back of numbers. AkzoNobel hit a record high on the back of numbers. MRF, Zomato, Karnataka Bank, Blue Star as well as Kansai Nerolac. These were few of the other names that reacted to Q1 numbers as well. On the back of newsmakers, the key one was Ambuja Cement as well as Sanghi Industries, wherein Ambuja Cement has acquired majority stake in Sanghi Industries for 5,000 odd crores, on the back of which we did see movement not only in these two names but other cement players as well. And you had a Sterlite Tech which got a 250 crore deal for building data centers, so that was another one in focus. But clearly, an interesting day of trade, consolidation is on the cards, is what analysts are pointing towards. Back to you.
And the shares of Sanghi Industries rallied in trade today. This after Adani Group company Ambuja Cements acquired the Gujarat-based cement maker. Ambuja Cements bought 56.74% stake in Sanghi Industries at 5,000 crore rupees. BQ Prime spoke to the director of Ambuja Cements, Karan Adani, about the deal.
We have a CCI approval to be taken, which we believe will take anything between 60 to 90 days. Post CCI approval, we would be closing this transaction. So in the way we look at it, it will be anything between 3 to 4 months.
Okay. Now, the last point that I would like to address, and you've kind of alluded to this when you spoke about the strategic value of this particular acquisition, you have a plan to increase capacity significantly over the next 5 years, and this is well known in the market. Now, how does this stand in the context of that? Because I believe in your address also you pointed out that you will reach around 100 million ton per annum by 2025. So that's closing the gap very significantly. And I'm also quite keen on understanding what is the kind of investment you will make in that captive port and how will it synergize? Will it work on the production of only Sanghi, or will it also tie into the rest of the capacity that you have in and around that region?
So the way, as you rightly said, we are already implementing 101 million metric ton. So these are already projects which are approved, which with the capex approved by the board, and where we already have all the environment clearance, land, resources available, and this is an implementation stage. And we expect that by 2025, all of these capacities will be coming online. We are working on the next stage, that is phase 2, which is taking us from 101 to 140, which we will be announcing in matter of another 12 months time. And where we are already working on getting those approvals in place, and mainly the environment clearance in place. In terms of the port, this will be predominantly for Sanghi Cement and for the Sanghipuram unit. we would be looking at, as we expand this capacity to 15 million ton, we would be looking to deepening this port. We would be looking to expand the number of jetties over there. And the idea is we would be using the strength of Adani ports over here from an engineering point of view, from a dredging point of view. And currently the draft over there is 4.5 meters. Our target is to take it up to 12 meters, so we can bring in vessels sizes of anything between 10 to 15,000 DWT in near future.
And BQ Prime also spoke to analysts about the deal. Listen in to what Rakesh Arora and Naveen Sahadeo had to say.
I think it's an excellent acquisition at a very, very attractive valuation. I think the fair value would have been more like 6,000 crore plus. But given that Sanghi was a distressed seller, Ambuja has got an excellent deal. It gives them a platform to really expand their capacity quite quickly. Meaning they have already guided for doubling the capacity by FY28. And this has come like a shot in the arm because the infrastructure is already ready. The clinker capacity is much higher than cement capacity and they can just add grinding units. So within a year, I think they can go to 9 million ton. So overall, it's a very, very positive deal.
To begin with, your results for the quarter have disappointed. There is a sequential drop in EBITDA per ton. Second is pricing, as you already pointed out, are weak, and obviously because of the monsoon season and in general the underlying competitive intensity, there is not much expectation from price hikes also. So your EBITDA per ton in Q2 tends to be that much more down, and it can slide down further.
And Morgan Stanley is bullish on India. While India has been upgraded to overweight, China has been downgraded by Morgan Stanley. According to the brokerage firm, India's macro indicators remain resilient. Moreover, the economy is on track to achieve our 6.2% GDP forecast. As per Morgan Stanley, a young demographic profile is supporting equity flows. The Indian economy is benefiting from a surge in inward FDI, but can there be some concerns for India going ahead? Well, according to Morgan Stanley, a surprise uptick in inflation may have a negative impact. Another cause of concern may be AI, which can disrupt India's service, exports and labour force. Despite the muted June quarter earnings, Titan CFO Ashok Santalia says he is satisfied with the results. He also expects to gain up to 10% market share in the jewellery business by 2027. What will be Titan's growth drivers in the upcoming quarters? Let's listen.
We already spoke about that July has been a very, very satisfying month for us. Adhik Mas perhaps was there in last quarter two also. Our quarter two gets more anchored on the diamond activation, and that drives quarter two growth as well as margin. So far, doing very well. Very difficult to predict how August, September, but what we believe that overall, if we forget about a month or a quarter neither, when we spoke about FY27 dream of 2.5x, and that meant certain CAGR over 5 years. I think we are tracking that very well, and we don't see any concern on that. And that is where we always talk about that our primary focus is growth on a consistent margin and market share gain. And that is where if we really deliver FY27, which we are on track to do 2.5x of jewelry business on FY22 base, we should be about 10% market share of the industry in India.
Thank you for watching Let's Talk Business. It's time for a short break.